This is Daniela Cambone for Kitco News, continuing with our coverage from the PDAC in Toronto. And joining me now is my good friend Paul-Burton. He's the Senior Equities Analyst over at Thomson Reuters GFMS. Paul, thank you so much for being with me.
It's a pleasure, Daniela. Good to see you again.
Well, I'm happy to see you again, Paul, because you're really known as being a guru of gold stocks. And that's one of the number one questions I get asked by our viewers. But first of all, let's start by speaking a little bit about what you came to tell attendees.
Yeah, that's right. I gave a paper on Sunday really talking about the potential for investing in junior stocks in Ontario and Quebec. We've just done major reports on those Canadian provinces because there's so much development and exploration going on there. So it's really exciting regions. And of course, they're politically stable and very good regions for investing in. Although, having said that, in the Fraser Institute reckoning, they've actually both come off a bit because of mining tax problems and perhaps and so the explorers are not seeing them in quite such good light as they did, but they are safe jurisdictions and of course very geologically prospective. So I think we covered something like 200 projects in Ontario from 90 odd companies, and in Quebec there was about 175 projects that we covered in precious metals from about 70 companies. So it's a very, very active region.
Well, actually, you just mentioned the Fraser study, and it was interesting to see New Brunswick in the number one spot now. Were you surprised?
Yes. I mean, it doesn't really fit into our universe of gold exploration so much, but yeah.
So now you mentioned Ontario and Quebec. Are you really focused on Canada? Would you say that's one of the best places for mining right now in the world?
Yeah, as I said, really because there are so many uncertainties, political risk and security of tenure in a lot of countries around the world where there are deposits and where is exploration going on. But you have the political stability here, which counts for a lot. And so, they're very, very good jurisdictions for explorers.
But Paul, it just seems that there's so many juniors on the scene now. Would you say there are too many?
I don't think you can ever say there's too many, but it makes it very, very difficult for investors to really follow what is going on. Of course, a lot of these juniors don't have analyst coverage, so they can't get an authoritative view on them. So it makes it very, very difficult, and investors now have so many choices. They have to do a lot of homework themselves to try and keep up. And hopefully that's one thing that we can provide. I like to try and give investors some idea of what they should be looking for.
Right. What would you say are some red flags that people should be paying attention to? Because like you said, it's so difficult to choose with all this choice of juniors.
Well, let's put it the other way around, if I may. What I did in my paper the other day, I gave a sort of rough guide to investing, showing some of the things that they should be looking at in a company at various stages of the product life cycle. So in early stage companies, there's certain things that investors should be looking at. They should be ticking boxes on what is the management like, does it have a track record, do they have geological expertise, do they have the license, do they have ownership of the property, those sort of things. And then as you move through the product life cycle, my 6D model, you're looking for different attributes and characteristics each time. If you've got a structural framework and you can work formally through that, you can then start to assess companies that way. And certainly one of the key things at the moment, of course, is do they have money? Right. Because it's not easy for companies to raise finance at the moment in the junior sector. I think the financings last year in gold were down 16%, so from 2010 to 2011. So you're looking for companies that if they've got a program of drilling planned, that can they afford it? Have they got the money? What is their burn rate? All those things to see that their program can be sustainable.
Do you know if there's a higher concentration of juniors in Canada than any other country in the world? And if so, is there a reason for that?
Look, I haven't anything exhaustive to say how they rate compared to the rest of the world. Firstly, Canadians are the most active juniors anywhere in the world, but probably at the moment Ontario and Quebec account for a high proportion, right throughout from early stage, very, very early stage reconnaissance drilling and work to right through to actually developing mines now.
Now let's talk about the famous question, what everyone wants to know, the performance of gold stocks. What do you expect for 2012, Paul?
Well, that's been the key question, as you say. I showed a graph the other day of the XAU, and I've indexed it back to 2000 and the gold price back to 2000. You can see the schism that occurs in 2008 after the economic crisis. Gold recovered very quickly and has obviously gone to new highs last year. The XAU didn't recover as much, and in fact has gone the other way and has started going down. So there's this huge gap between gold price and the market valuations, and of course we're all hoping that we start to see a reversal of that trend. I showed you can look at that in a slightly different way. If you can look at the ratio of the gold to the XAU, and for many years it was around about 5.3, and then from 2008 we've seen it jump up to around about 8 to 10, which shows that gold stocks are very undervalued at this point in time. What's going to turn it around? I think one thing is that hopefully people will start to realise that this gold price is here now, and we saw it come off from 1900 last year. I think people then thought, right, we're going to see it come off in this bull market. It's going to turn to a bear market. But I think it's stabilised, and I think we've seen this trend above 1700, and I think people will start to realise that the gold price is there for a start.
Right.
I think then they'll start to realise, okay, I've put some money to gold, but now I'm going to go back to some of the gold producers and the gold developers now to try and regain the leverage that we always used to get from those type of companies. So there's a number of factors. There was a lot of money went into silver, of course, at the end of 2010 and early 2011. And a lot of the money that went into gold actually was in the Far East. And those guys are actually not going to be investing in gold stocks anyway. They go for the metal there. So that's one reason the gold price moved. And you didn't expect to see that money coming through into the gold stocks as well. And of course, they are stocks, and so they often will travel and move in the same general direction as the stock market. So we're to a degree reliant on that as well. So I don't have a good answer, I'm afraid. I don't know when, but I do expect to see some return to norm over the course of this year.
But if we had to sum it up, for a perfect equation for gold stocks to perform well, you need a high price of gold and you need a healthy stock market?
You do. You need people willing to obviously invest in right. stocks, and you need that gold price there. Now, the gold price is there supporting. We still right. see it at these levels and going through 2000 over the next year or so. So, yeah, that's all. Everything's lined up. Yeah. We just need to get some spirit going into and some positive thoughts and a bit more optimism about gold stocks, I think.
Paul, thank you so much for your thoughts today.
Pleasure. Thank you very much.
And thank you for watching Kitco News. You can stay tuned to Kitco.com for more coverage from the PDAC here in Toronto.